Hello, hello. Can everyone hear me okay? Awesome. So I'm here today to talk to you guys about something I'm super passionate about, which is Bitcoin mining. But before we get started, I want to kind of highlight something that's, I think, oftentimes underappreciated and undervalued, which is the fact of how collaborative the nature of our ecosystem and business is. Oftentimes, you'll find that the best actors in the space are the friendliest, most open, and easiest to work with. So with that in mind, I'd like to go behind the curtain and show you a little bit about what we've been up to at Foundry, some of the initiatives we've launched, what we've done to help grow the North American mining ecosystem, some of the challenges we faced along the way, and where we see things going in the future. So before I dive into Foundry, our company, we have to talk a little bit about our parent company, DCG. DCG is short for Digital Currency Group, and it's always been focused on driving institutional adoption in our ecosystem, much like Copper. And DCG is a very large conglomerate, and we're best known for some of our subsidiaries. We've kind of led the way with digital asset management with firms like Grayscale, with financial services in the form of Genesis, with news and media in CoinDesk, and more recently, we actually acquired Luno, which is, you can think of it as like the Coinbase for developing nations. So we're targeting the retail market as well. And DCG also operates very much like a VC firm where we've invested in very many different portfolio companies, ranging from exchanges, tokens, protocols, et cetera. And all that's to say, we've got our hands in kind of many different cookie jars, and we're very well connected within the ecosystem. But the one thing that was missing was something on the infrastructure layer where software meets hardware. And that's when Foundry was launched. Before I get into the Bitcoin mining piece of Foundry, Foundry does also have a staking side of the business. And we recently launched this last November. We've supported 20 plus different protocols for staking. We offer node validator services, staking as a service. You can see here's just some of the different protocols that we do support. And we're going to be keeping on adding new tokens and new protocols on a regular basis. We also have Foundry Labs, which is focused much more on research, incubation, and development of new projects. All right, so on to the good stuff. So proof of work, or as we know as Bitcoin mining. So our Bitcoin mining business is very much focused on institutions. And earlier on, when we first formed our business at the end of 2019, one of the biggest barriers of entry were some of the FUD narratives around Bitcoin mining and proof of work. In particular, much of it was obviously centralized and concentrated in China. So there was this narrative that Bitcoin mining and Bitcoin and the larger crypto ecosystem was controlled by China. The chips are designed there, they're manufactured there, the units and miners are deployed there, and ultimately a lot of the hash rate reconnects back to pools in China. So definitely was a lot of vertical integration. So we wanted to shake things up a little bit. We knew that it was decentralized. We obviously knew that miners connect from all over the world, but we also wanted to lead by example and help grow the space within North America. The other narrative that we're always combating is the ESG side with the energy mix and the energy consumption of Bitcoin mining. So I want to kind of go into that a little bit today. And to address some of these different narratives and kind of drive adoption, we launched 5 different proof of work business lines. The first of which is equipment financing. So if we go back to early 2020, the situation was pretty dire. Coronavirus news kind of shocked the market. March 2020 was quite brutal. We had Black Thursday where Bitcoin, many other assets dipped quite significantly. And then it was also leading up to the last halving in May 2020. So mining economics were looking pretty dire. And very few people were actually interested in Bitcoin mining. And that was very difficult, especially when you're looking to raise money in a very capital-intensive business. Not only are the ASIC miners very expensive, so are the facilities that are required to be built up to energize the equipment. So we wanted to leverage our balance sheet and our capital to help accelerate and give a jump start to the space. Another difficult piece about Bitcoin mining is also the procurement risk of getting the equipment itself. So we wanted to leverage our capital, get the units, take on the risk ourselves, and kind of lead by example. And by the end of 2020, we actually financed over 50% of all of the latest generation equipment coming from either Bitmain and MicroBT, the top manufacturers in our industry. And to date, we've deployed over $400 million worth of ASIC equipment. So not everything was used for financing. We also deployed a lot of units for ourselves for what we call proprietary mining. So that's better known as self-mining. That's where we're mining with the units for ourselves. And the easy thing for us to have done at the start of 2020 and for the past couple years was to deploy with 1 or 2 mega sites and just mined for ourselves and held on to all the units. But instead, we actually worked with many different sites all over the world because we wanted to drive growth and especially support the smaller data centers. So in mid-2020, before the big Bitcoin run-up, many of these sites were struggling with previous generation equipment that were less efficient, and they had a lot of empty shelves. So we worked with many different firms to help them fill their empty shelves to kind of grow their businesses. Things are very different now where there's a lot of constraints on the capacity, but it was a very different time then. And to date, we've actually mined in 6 different countries in 3 different continents. So in addition to the groups that were lacking capital, there's also now a new entrant of market participants, especially those that are institutional, right? The large energy producers. We also have publicly listed companies, sovereign wealth funds, and nation states. And these groups, they don't lack capital, they don't lack money. They have a very strong balance sheet, right? What they lack is industry expertise. It's a very opaque and difficult to navigate industry with lots of pitfalls. So we want to offer consulting and advisory, kind of guide these firms and these groups to how to actually tap into Bitcoin mining economics and to be a successful mining operation. And it's about shepherding these guys and bringing them to the right vendors, the right networks, so they can be successful. So we've physically brought over the miners. We did it in the form of financing, we did it in the form of self-mining, and teaching others how to mine here in North America and other parts of the world. But one thing that was still rerouting back to China was the computational power, the hash rate. So last year in February, just about a year ago, we launched Foundry USA pool. The USA is in the namesake because we're very proud of the fact that we're a North American-based company. We're based out of Western New York over in Rochester, and it's completely built from scratch, and we wanted to help shake things up. When we talk about the Chinese monopoly that they had on the ecosystem, it's not about anti-China, it's about anti-centralization. We all know that a more decentralized network is more secure, and something that's more secure is more valuable. And it's accretive to the entire industry for it to be more decentralized, and then all boats rise with the tide, and DCG just happens to have a very large boat. So we offered this service up for free. It's 0 fees, and institutional miners can connect to our pool and mine risk-free, because we also take on the luck variance where every day there's only 144 blocks of Bitcoin mined, and many times the pool can go on very long streaks of either good luck or bad luck, but they have to pay their customers out regardless. So we take on that risk to kind of make sure it's a smooth sailing for all the institutions entering in our space. In the past year, since we launched our business, we've now kind of jumped and leapfrogged all the way to become the top mining pool in the world with about 15% of the global hash rate. Our most recent business that we launched is Foundry X. And this is our trading desk and our marketplace for buying and selling equipment. So in addition to bringing miners over here, we also want to make sure it's a liquid market, it's an efficient market where you can either buy or sell your used ASIC equipment or new equipment. And much like I talked about before with equipment financing, it's about de-risking the delivery and the procurement aspect of it. Especially when China banned mining, over 50% of the global capacity was displaced, and a lot of these miners were looking to either relocate their miners or to fold up shop and sell their equipment. So this is a very friendly and easy escape valve for them to kind of drive volume and to sell their equipment or to procure more if you're looking to grow your business. So we have a review of kind of present day and where we are now. I just highlighted that China cracked down on mining. So the adage and the meme of China banning Bitcoin has been as old as this conference itself. It started in 2013. But this time around last summer, China actually cracked down hard and banned mining. And when that did, over 50% of the network went offline. So we were at an all-time high of Bitcoin network difficulty and hash rate of about 180 exahashes last May. We're just about to re-enter that all-time high this coming week, this Friday to be exact. And what's happened is for the last half year, we've had essentially 50% discount on Bitcoin mining because half the competition fell off the face of the earth. And when that happened, it also constrained the hosting infrastructure and the capacity that's available. There's only so many slots in space that you can plug your units into, and it takes 6 to 9 months to build out these facilities. So the hosting infrastructure shortage is very, very tight and very, very bottlenecked right now. When it comes to the centralization narrative, that's pretty fascinating because ironically, China banning Bitcoin mining has destroyed a lot of that narrative that they control it because they drove it out of the country. The irony is actually going to be in that here within a year or two, many people start saying that the centralization is going to be focused here in North America because so much of the mining is actually coming overseas here. But the reality is the Western countries like Canada and America operates very differently. We're a republic where we operate as very independent states, and these jurisdictions can be looked at as different countries. So it's actually quite decentralized still. As far as the energy consumption in that narrative, I think it's very important to do proper education and share the data that we're collecting every day, whether it's from the mining pool or from our equipment financing, our sales, any of our business lines. It's important to get the facts out there to kind of combat some of these narratives. We recently did a study at the end of September where it showed that about 70% of our hash rate on our pool was actually non-fossil fuel based. And of that, majority of it was actually stranded power, the power that's otherwise wasted or wouldn't be used if it wasn't for Bitcoin mining. So these are very important talking points and strong data that needs to be shared with the right regulators and policymakers so they know, so they're properly informed when they're regulating something. When the China bans happened, it also highlighted some of the new opportunities that are out there, especially those regions that have cheap electricity, but were either too hot or too humid, especially those in the southern hemisphere, like the South Americas or Southeast Asias, where there is plentiful power, but it's too hot or too humid to run air-cooled miners. So now that so much of hosting capacity is constrained, these regions are getting a second look. And to tap into these regions with their kind of more difficult environments, technologies like immersion cooling has become much more prevalent. And I think that's going to get accelerated moving forward. And there's some other challenges we're going to be facing along the way. So for each one of our business lines, we have our unique challenges. With equipment financing, price discovery is always tough. It's not the most efficient market when it comes to dealing with ASICs, and it's hard to predict what the price of Bitcoin is going to be. When you're setting the terms and the tenors, are you going to set it at 12 months, 18, 24 months? 2 years from now, we're going to have another Bitcoin halving. So we got to be very careful with not only where we set the price point, but also how long we set the terms of the actual agreements. Then when it comes to self-mining, our own proprietary mining, there's obviously huge constraints on the hosting capacity. And there's long lead times to get these places built. So are we going to deploy our own capital and help these groups move along? And how do we identify new sites that we can help grow and kind of expand the hosting capacity so that more and more miners can come on? With advisory, it's on those same veins. Everyone right now is interested in getting into Bitcoin mining. The economics are so good, right? When you're an energy producer, you're looking at typically anywhere from $20 to $50 a megawatt hour for what you can sell for your electricity. And Bitcoin mining yields somewhere from $350 to $500 a megawatt hour. So you have multitudes more on your income for your electricity if you can tap into Bitcoin mining. So there's a lot of interest right now. For us, the struggle is actually picking the right groups that have aligned interests with us that also want to be Bitcoin mining and in this ecosystem industry, even during the tough times. They're in it for the long haul, not just a fly-by-night type of operation. With our pool, I mentioned it before, but making sure we're collecting the right data and combating some of these narratives, sharing it with the right public policymakers, lobbyists, and just making sure the research is out there and open and accessible. It's making sure that our participants, we get consent from them to share their data. And the other piece that's really tricky with the mining pools, because we're so focused towards institutions, we want to make sure we actually serve retail and hobbyists. All right? How do we actually get some of the home miners? How do we get our offerings to them as well? So that's a challenge that we're constantly facing. How do we offer these services to everyone? And then with Foundry X, our brokerage system, it's tricky because we always deal with new equipment, but what about used equipment? Who takes on the risk of faulty used equipment that's either been used very harshly or been running in rougher terrains and ecosystem and climates? Also making sure that they actually deliver on time. When you're placing orders 6 to 9 months in advance, that's a lot of cost of capital without the money working for you. And making sure they deliver on time, because there are delivery delays from the manufacturers, that's always going to be a challenge. So making sure we're tackling those type of challenges and those barriers is going to be very critical to making sure that this ecosystem becomes more efficient. So that's kind of what I have to share with you today. If you're interested in this resonated with you, if you're interested in Bitcoin mining or even in staking and the infrastructure layer of kind of our industry, feel free to reach out at foundrydigital.com and let's see if we can work together. Thanks, everyone.
All right. Thank you very much.